today is a sector that everyone should invest, or at least think to invest. Now, why is it? Because it is very, very distinctive, especially Malaysia being a rubber manufacturer, not right now, but in the past 10, 20 years ago, now that rubber plantation has sort of moved over to Thailand. But before that, Malaysia, was one of the largest rubber plantation in here, but now it's overtaken by, we all know, it's palm oil in there, right? Because rubber plantation takes a longer time to invest, and it takes a longer time to, but that has not turn the rubber plantation into an industry, which is why Malaysia are good in, which is the rubber glove sectors in here. Now, you all know some of the biggest rubber glove sectors are actually in Malaysia. So it's one of those industry which Malaysia has a play, and there are some technologies involved in here. If you come to think of it, some people did ask me, why didn't the Chinese manufacturers do as well as our Malaysian rubber manufacturers? Now, one of the things is because Malaysia has a good lead time in there, and also these are a little bit of technology basis. It's not so much on what we call manual. I think if you look back 5-10 years ago, before the real automation came in to the rubber sectors, maybe if you have a cost advantages will be definitely labor. Now today, I think many of our Malaysian rubber sector are competing on edge technology, on superiority of the quality, even with the Chinese manufacturer. But today, I'm going to talk about a little bit also on the US trade war and how it does impact the rubber glove manufacturer. So the topic for today is the rubber sector remain a bargain or fairly priced in Bursa, Malaysia. And with the use of Robi, our latest product in here, still free access now. If you have not used Robi, please do check it out, because that one is going to give you many opportunity to look for those hidden jewels. That's right. Okay, so what are we talking about rubber sector in here? As usual, our TradeVSA Telegram is really growing. We are going to be, hopefully crossing the 3,000 mark, which is not a lot, but it does from your support that we have so far. So do share this TradeVSA QR code with your friends, so they will benefit not only from trading ideas, but also from fundamental analysis, trading tips, coaching, so where you will benefit. So do share this around, right? Not forgetting is also our TradeVSA YouTube channel, where we continue to make good, interesting videos. Right now, we are focusing a lot on the sectors. Now, remember, I've said early on, we have completed the energy sectors, which is the oil and gas, then the technology sectors, finance last week, and right now we're doing the rubber glove. Now next week I'll be covering the plantation sectors. Now plantation has made a good run, so we will look at it whether this continued run will enable us to hit for the first time for palm oil prices 3,000 ringgit now, which is, we are close about almost hitting 2.9. It floated back to 2.8 in here, but who knows, that could be the high or that could just be the low. So do subscribe to our YouTube channel, and let's move on. Now, definitely one of the biggest proponent why you should have some money on the rubber glove, which I do have. I bought Hata around $2. I made close about 200% return since then in here, and I continue to hold it. And one of the reasons, let me just turn on my laser pointer, and this is one of those stocks that will really, in my opinion, will make you money. Not the fast money, but in the long run, will make you money. If you look at it, in terms of the CAGR stands for cumulative average growth rate of about 8 to 10%. All right, is that since slowed down because the number got bigger, but initially at the start, before the 2015 in here, the numbers was bigger. This is more like just like a quantum. It does has this what we call the organic growth rate, around 8 to 10% growth rate. Now, unlike many other demands, this demand from rubber glove remain to be steady, not like the mobile devices, and especially spurred by 5G. Those are what we call typically high growth area. So you look at the rubber glove demand, the number million of pieces right now, you have 287 billion pieces, yearly demand, and that's, if you look at it, the number of people that we have on Earth, I think somewhere around maybe 8.2 billion. So if it times 200 days, then of course not everybody use rubber glove anyway. So you're talking about maybe somewhere around 8 billion global population times 250% of that. There is still couple of numbers to grow. But what is really significant is the industry, the Malaysian rubber glove manufacturer continue to see this continual growth in the rubber sectors. No doubt about it. We are talking about hitting 20 billion. 20 billion compared to 18 billion, and that's a growth. And to me, this is some of the GDP growth that we talk about manufacturing other than technology. One of the biggest contributor in terms of GDP growth is the rubber sectors in here. Now, just keep in mind. Now, next also, we have the rubber sectors player in Malaysia. Now, Malaysia, like it or not, we have close about 500 over latex producing, including tires and so forth. But the really four king, right, the rubber glove maker are Top Glove, Hatalega, Kosan, and Supermax. We cannot really run away from all these four. And really, we really want to look at what constitute so-called the advantages that this four rubber glove maker has. Definitely, if you look at it, is the average cost breakdown, the raw material, overhead. We used to think about, whether the labor problem. Now, we do see, especially in the Malaysian context, where a lot of foreign workers have been brought in. Is that going to be an issue if the industry, the rubber glove industry, continue to rely on heavy labor? But that has not. Over the last 5 to 6 years, there has been a fair bit of automation going on. You do see those rubber gloves. They do a lot of testing. They pump in. The only thing which is I find my last visit to rubber glove in Kamunting was the smell. Because I think they use a lot of chemical smell inside there, and that's why the chemical represent 10% in here. Labor still around 11%, but the raw material, ladies and gentlemen, the overheads, these are marketing costs and things like that. Rubber gloves used to be, a lot of them are OEM, but now Top Gloves is really a brand to be reckoned, and so far it stands. I do think overhead costs was significantly increased because they want to get a bit more branding in there. One of the things I did not cover in the rubber sectors, rubber glove, it's the condom makers, which is one of the company I did visit was the Carex. Maybe we'll keep that for another session on our live AVI, which we talk about. Of course, do share this and do let me know what are the things that you like us to research on and would like to present you on the relativist sectors that we talk about here. Now, of course, other than that, we still need to remember the last slide where we talk about material costs, which contribute. Let me look at the material cost here, which is almost 50% of the making of each rubber glove. So definitely we have to look at the rubber futures prices. Now, from here onwards is the chart that you see from 2006 to 2019, which is almost 13 years ago. We went up to as high as almost 500 US dollar. This is listed on the Tokyo commodity exchange, the rubber, I believe 225, and which does impact everybody else. Now do take note, the latex rubber are synthetic rubber, so the prices will always be incorrelated with the rubber, but maybe just a little bit more premium. All right. Having said that, the price has stabilized since back to 2014 with the, probably on 2017 where we have, the booming period in here. So there was a shot up in terms of, this is a monthly chart, hit about 330 US dollar in here. Now sort of settled back here at the support of $160. Now looking in terms of the cost, we came from the bottom, early this year, 2019, from $160 to $200. That is almost a 25% cost increase. Now, if we were to break above the 200, 210, we are looking probably another 60%. Now, why this is important? It's because 50% of the cost does come from the rubber prices. Having said that, I believe with the margins that they have, they are able to absorb any strong so-called big move in rubber prices, unless that product are generally depending whether it is more latex or more rubber. It's just a composition. They can play with it to lower the cost, so the prices are not passed to the consumer, probably absorbed by the rubber glove maker. I think that's it's so important to keep the demand steadily going out there so more people will have it. But what very important about this chart is that the costs are coming down, right, and that will maintain stronger demands going forward. Now, next we want to look at is this, what we call the switch between the latex rubber and to the synthetic rubber, which is the nitrate glove. If you look at it, I think one of these is probably due to the heavier consumption in US way back in about maybe 5 years ago or 6 years ago, where we see the what we call the latex, the rubber latex. It's only 1% or 8% of the rubber, 1% of the world population, or 8% of the rubber usage. Of course, latex, which is being a natural rubber, it's cheaper than the synthetic rubber, which is actually made from composite of petroleum. So you can see, because of the allergy, there was a switch to a more pricey nitrate glove. So nitrate gloves now becoming a bit more what we call the premium glove, and it is the so-called preferred choices of many healthcare practitioners like the doctors, because one thing for sure, the synthetic rubber are not prone to what we call breaking. The pinch, if you take a little what we call a pin and you poke through the synthetic rubber and the natural rubber, you can find that natural rubber are more prone to this pick, whereas the synthetic sort of tend to last like a little bit more. Of course, comfortability, you will look at the synthetic rubber, and that's what we call the nitrate glove, okay, which is, I will talk about the next slide too. So this is sort of moving to a better premium. You can see 61% of the first half and so forth. Now, also we want to look at is the organic growth, okay? The organic growth of each country in here. You can see in terms of glove consumption in here, most popular country are the lowest number of growth. You can see that Denmark, Holland, USA, and these are so-called what we call the stronger GDP. India, China, and Indonesia, they are very, very small consumption in here. You'll be surprised in here if you look at Australia, 141, Finland, Hong Kong, Greece, Sweden, Belgium, right? So interestingly enough, you can see some of the world population have the highest, they are one of the lowest consumption. Now just think of it. If Philippines has about 110 million, China, we're talking about somewhere around 1.2 to 1.6 billion. Indonesia, you're talking about somewhere around the 300 mark or 200 mark million, and India 1.2. So they can see that is huge growth in there. And when the healthcare sectors, okay, the healthcare sectors were to come in and really sort of put more practice, then I do see this is going to see much of the growth. So that's a lot of upside from here just on the glove consumption per capita by country. I mean, logically think of it, these are the most populous country in the world, and yet they use so little glove. Doesn't make sense, right? So if you look at the left-hand side here, Denmark, Holland, this is a really small, tiny country in the Nordic. I've been there before in Denmark, and they're a very clean country. Probably everybody uses glove. Okay, let's go on to the next slide. All right. And then let's look at the world population in here. Okay, very important healthcare demand. As I said before, they will grow in tandem, right? So you can see China, we talk about China, India, Philippines, which, the demand of the healthcare, it's coming, but it's not as good as those EU countries. Again, it's all got to do with the mindset and education. But what's very important now is the world population growth here. So you can see at the two charts that we have, chronic diseases, which will tend to increase by 57% by 2020. And 60% of them will occur in emerging markets, which is those markets we talk about, right? Philippines, India will have a lot of these chronic diseases, and where there is a consumption of it. So one part is the emerging markets where they have more demands and they're one of the populous. Second part is the world population. You can see here are still growing, not fantastic, they're not growing as much in the 80s or the 90s in here, but because you have close about right now, you're talking about somewhere around 2020, somewhere around 4 billion plus, so that number will continue to grow. World population is around here, we're talking about 7 to 8 billion here. Okay, 7 to 8. World middle class, you can see that really growing, right? As I think this is probably spurred by the middle class of China population. Okay, very important. So world population grow, healthcare demand will grow. So I think that's sort of give a basis why we as investor should have some exposure on rubber glove. Now, this is one of the sectors which is really growing. I mean, if you talk in terms of it, and if you don't have a portfolio in this, then the question is, how much valuation or how much do you intend to pay for it? I think that's the question that remain to be in many distances of people right now. Okay, now let's look at the rubber sectors analysis in here. As I said before, there are many types of rubber, but the big rubber glove maker are the latex, the nitrates, which is the synthetic, and the PVC. Now the PVC are the plastics one. You don't see that used a lot, and you see a lot of rubbing also. You know, plastics in here. Just imagine you have two plastics, and you take it together and you rub the surface of two plastic. You hear that hissing sound, right? So that's why a lot of people don't like to use the so-called PVC rubber unless they are more for other industry users, okay? So that's one of the reasons why, and also this is something also I learned from the condom making. You don't see a lot of plastics used in condom. They are stronger plastics compared to rubber, of course, right? If you take a rubber, they are harder because of the density in here. But in terms of comfortability, the nitrate gloves, because due to the non-allergy being synthetic, right? And also finally is the latex, where in Malaysia, we have still some rubber plantation, but majority of them are already in Thailand. And that's what Thailand, some of these factories like Top Glove, they have built it also in Thailand, where they are closer for the latex. Now looking from this, you do see that many makers are really turning to nitrate glove because of first of the demand, and second also with the premium prices that you are paying because of comfort, non-allergy, not susceptible to prick, you know, the breaking of the rubber glove, especially, you know, if you're handling, you know, all these chronic diseases or infectious disease. You don't want contamination of the skin of the healthcare practitioner into some of those diseases, and it's really bad policies for that one. So that's why we do see nitrate glove is being one of the biggest demand in here. All right. So now if you look at it from the Bursa healthcare standpoint, now do remember Robi, one of our AI analytics, you can see this, just type sector analysis inside Robi, you're able to see that. Right now, you can see healthcare sectors remain to be neutral. If you compare to the KLCI, which is here, it is slightly, you know, not as bullish like those two sectors that we talk about. Plantation is already back here. Technology and energy, remember all these really three parts. This industrial product is dominated by the Dyson factor. So check out that Dyson factor video that I've talked about. And then this is the food, the property, it's not so good. And you got the finance, which I talked about last week. But the healthcare is really been so-called the underserved. No one is really watching it, and that's why we find that it's a bit neutral. Then one of the reasons why when you go on to the fundamental analysis, which I'll talk about next, is also the valuation. Valuation in the sense is mean, is it expensive or is it cheap? I mean, if you look at properties, you always have to look at what we call the per square feet. Okay, and a lot of the developer try to put the per square feet by putting a lot of what we call extra in there, like, you know, decorations, furniture, so that we can make the pricing different so people cannot compare. But at the end of it, valuation is quite important too. Okay, let's move on to the next one. Here is on the TradeVSA. Now for our members who have a TradeVSA, so you have the benefit to actually choose what sector you want to look at. Of course, the most bullish sector are those that have green, and the one that is so-called, in this case, you can see Supermax, Hartalega, IH Healthcare, and Top Glove. They are not in that very, you know, so-called conducive bullish range, and that's why we are looking at it. Having said that, when people don't look at it, we look at it. All right. So make sure you get into your sector analysis on the healthcare and take a look at those. So for those of you, for our members, and for those of you who know, we use color-coded. Right, just back to, let me just show you this. If you go back to the previous one, this red, right, it's what we want to avoid. Red. You can see that, right? So red, and this is the red. So red, purple is something you want. So these are the one that we want to avoid. We see red, purple, we avoid. Okay, red, green also we avoid. Now the one that you want is definitely this one here. which is the plan, the color-coded one, where we give them 5 star. Green, 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 or you have green, green, red, so, or we have purple here. Even the purple, purple, green is still good. So what we are looking for are those that are in green, green sectors. Now you can see here, green, green. NPS is definitely falls into that area, or we have top vision eye specialists fall into that area. So that helps us to select stocks that are trending up, because we really want to buy low and sell high. I mean, that's a logic behind it. And if you're not, then you're buying on valuation, then make sure it pays you some sort of a dividend. I think it's important to have that one too. Okay. If you have any question, do let me know. Okay, I'll just look at the question, because I tend to, all right. All right, so let's see. Okay, if any question, do let me know. So let's look at the next section I have here is the how to use Roby. Now remember, Roby is one of our launch product, and we're really promoting this. So how can Roby help you reconfirm daily basis? You can see this is one of the report that came out by just very recent, 2nd of December. It said to buy in here, and Roby would probably do the same analytic as this, so it's sort of like, you know, you can use it as a cross-reference, or you use reconfirm. You can see this is 4th of December, doing 428. You can see here profit target is 457 on a PE of 10.5 times with a potential 8.3. So it does tells you that it's undervalued, and it says look and see, but definitely it's underpriced, but look and see first. It's not that fantastic, because reason is we follow the Warren Buffett margin of safety, which is 40% or higher. Then it is only 32. Okay, so it's only 32. It's not the cheapest. Having said that, so once you have a 40%, it actually tells you to buy. And if you follow the fundamental plus our TradeVSA, you're able to get in with a better price. So use that as a point of reference. Oh, now a little bit of advertisement promotion from Roby. For the month of December, our year-end special. Now we have our free TradeVSA plugin. So if you sign up now and you enjoy the free TradeVSA plugin until 31st of December, because like it or not, December month, we have many bullish sectors. You also get the free premium alert that gives you the small cap stock. We have a lot of good small cap stock that is actually running, doing very well. So make sure you get hold of the free TradeVSA plugin. Sign up now, and do contact Zach, our senior trainer, at this handphone in here, just for more information. All right. Okay, now 4 reasons why investors should buy the rubber glove sectors for year 2020. Now, like it or not, the US-China trade war, it's not over yet, as much as we like it. So the December 15 deadline, another new tariff has going to come in. But what has happened is the September 1st, a 15% tariff has been imposed. So we're going to see a lot of spillover in terms of more sales coming in for the month of December and January. So that's why the price of this rubber glove, if this 15% tariff kicks in, more US manufacturer or more US healthcare practitioner will actually buy from Malaysia. And that's Malaysia maker will stand to benefit, because Chinese glove maker is going to be a bit more pricey, so Malaysia will benefit. On top of that is the organic growth, which we talk about 8 to 10%. And remember, average of 82 million babies are born each year. And that's only a world growth rate of 1%. Right now, we are really around the 7 to 8 billion population in here. So 82 million babies are born each day. Right? And also point number 3, people are living longer. Now, I just came back from Hong Kong recently. And Hong Kong, like it or not, is voted by CNN as one having the longest longevity in the world. Very, very surprised. I mean, being Hong Kong, what we see, the riots and all this. Japan has fallen to 2nd place, I think partly due to recent, what we call the tsunami back then. So the numbers sort of did not put in favor of Japan. So people are living longer in Hong Kong. Partly one of the reasons why I talked to my friend who is in Hong Kong is people walk a lot in Hong Kong. You know, they walk from station to station. There's not much of a car thing. And also healthcare. He told me the access to healthcare, because Hong Kong is like an island. So everywhere you go, there's always hospital or medical centers. And that's why they're going to require more healthcare services, more rubber gloves. Now also stronger demand by nitrate glove from US, which account to around 28 and 55% of, depending which company maker we're talking about, that definitely almost 1/3 to half of the percent do being sold to US. And US GDP growth is still growing around 2% every year. So that's about 330 million people in US. So that's a lot of numbers in here. And right now we're talking about yearly demand of 287 billion glove being made. You know, that's 1 year, but how many, you use one-time glove, you have to change it, isn't it? All right. So that's what we see. Okay. So let's look at the Robbie fundamental analysis, and it's going to show you how to beat the market. Now, first thing is looking at the three. Of course, there's four, the king of the rubber glove maker, but we're going to look at three. But when you get your own so-called Robbie installed, you have not done so, and do share this Robbie with your friend, then you're able to compare. Right, again, we have the FA valuation, the FA rating in here, 2 out of 8. And even Kosan are not rated. So they are not really in the right favor to buy right now, also from the chart wise. So it's good that we want to see the ratings improve or wait for the technical signal in here. From here onwards, you can see healthcare, it does the PE about 30 times. That's a bit pricey. And Hatalega is 42 times. Kosan being the cheapest is about 23 times. The ROE not available, and they are quite slightly better, 15% and 17%. Dividends is because it's still continue to be using 1.7, and this is 1.5. We prefer something higher. So that's only 2 and 1. It's overpriced in terms of relative valuation. And looking at the intrinsic value at the 10% discounted rate of return, it is only priced at 2 ringgit 20 cents, but right now it's doing close to about 4.50. And for Hatalega, on intrinsic valuation of 10% discounted rate, meaning you want 10% return, so you only want to pay $2.10. Okay, $2.10 now is $5, and that's why it is overpriced by almost 60% in here. And that's how we look at it, right? So if you want to know more, go on to Robbie, watch that video where I talk about the intrinsic value calculation. And there's a very simple formula that I use. Just use this formula and you'll always be on the right track. So you don't have to pay the very expensive fundamental courses where I've seen people pay a lot of money. So you can use this to check it. And if you really want to, you can go for those workshops. Now also on Kosan, you can see here on 10% discounted rate, it is only valued at 17 cents. Oh my God, it's overpriced, isn't it? I mean, if you look at it, right? So that's, in my point, something that you have to be very careful. 417. Okay, let's look at the next. After the valuation, we want to look at the fundamental chart. Use the Pentagon Guider for timing, and you can too. Right now, you can check on Kosan here. It's on orange trend zone, so means it's bearish, right? Use the trading plan for Kosan if you want to enter. For Top Glove, there is a possible of a pullback entry. Again, you make sure you know how to use the pullback entry. Now maybe if you want to attend our courses, do check out on our website, TradeVSA.com, find out more, or attend our masterclass, which is what we're coming out. And then Hatalega, also very, very similar. You hit somewhere around and back to around 4. This is 410, 420 here. And Hata is also in the orange window. So bottom line is the fundamental valuation does tells you it's slightly average, right? It's not cheap, okay? And the indicators, the Pentagon indicators does tell you it is in the orange trend zone. So I would actually wait unless the demands, it's what we call the dividends that I'm looking for. If I bought it a bit earlier, I would keep it. So if you want to look for more stocks, go over to Robbie and check it out, all right? But right now, this is what we have for you in here. Now, how do I look for undervalued shares and look for those hidden gems, right? Definitely install the chatbot, all right? Install the Robbie chatbot in here. It's a free limited access only, and you can go over to TradeVSA.com, and when you see this little Robbie, click it and you're able to install it. So that's it, all right? So fairly simple in here, and this is a landing page to install that. On this Saturday, we will be doing our members training, all right? And one of the topics that we usually do in our members is the issue that is brought out by training. Now, on terms of the system and the valuations, these are all taken care by our analytics and also by our market timing charts. You have the buy and the sell. But what we want to focus on is issues that the members has, and this is why we are so different from the other educational provider or system provider. They focus a lot on method. Here we stress a lot on the mental makeup, the mental preparation that many of our members need to have. So on this coming Saturday, 14th of December in Tropicana, so we'd like to invite all our members. Also, if you've not been once, do check out and come on to our training and coaching. Now, two important things which is actually brought out by the members in the last meeting was how to increase position sizing without getting too stressed out. And second one, how to overcome losing money. So we're going to be talking about those issues and suggesting ways that member can look at it. So this is quite important. We want to solve both things, the technical, the knowledge, as well as the mental makeup. That way you will come out proven. And I believe going forward, that is one of the ways where we help all our members to improve their mental too. So right now the Robi is free for all, so make sure you install it and feedback to us, right? And have a rewarding time with Robi. Thank you.